Now, the government of Uganda has warned banks to ensure that interest rates do not reach a level where they need to be capped. Now, interest rates are still a major concern for borrowers in the country, many of whom cite them as the biggest impediment to private sector credit. Now, joining us for more on this is AfricaCatalysts CEO Dumi Jere, live in our Johannesburg studio. Thank you very much, gentlemen, for creating time today. Let's start off with that conversation that's happening in Uganda. Today, you're looking at the central bank lending to commercial banks at a 9% rate. But when you look at the rate at which the commercial banks are lending to the private sector or even the Ugandans, it's up to 21%, a very high rate if you ask me today. And they have come out saying that this is rather very high, and it's we've seen this replicate. We've seen much on the back of this. So what do you make of such a statement that if it gets out of hand, the central bank is stepping in?
Well, I think the Minister of State for Planning is not entirely oblivious to the Kenya situation, and that's the fact that in Kenya the interest rate cap has, for lack of a better word, failed. So he is aware of that introducing such a drastic move will stifle the environment as well as the economy. So he is not completely oblivious to that fact. So him coming out with that, I think it's almost a way to caution the banks to operate within, the confines. Because when you look at the other guys in the region, from the repo rate, the rate from the central bank, the other guys usually add between 4, 5, or 6 basis points on top of that. But the Ugandan situation has seen that almost double plus some extra basis points. And I think that's what he's trying to say, that the rates that you then on charge to the private sector, they need to be managed.
Dumi, now we do understand that the central bank has been cutting and lowering the repo rate as time has been going on, just to see that there is a slight change in the banking sector there, but have not seen any response from commercial banks, as we see it's been rather going up instead of reflecting on what the central bank has been putting in place. This is rather more worrying, but you do understand conversations on this on the same. So help me understand, at the particular moment, what do banks in the country need to actually do just so that they can tread fairly?
Okay, so the banks are looking at it from a point of view where they are carrying most of the risk by providing credit to different entities, be they private or otherwise. So in an effort to mitigate the high cost of money, that's the justification that they're giving for coming up with rates of up to about 21%. Now, on the other side, high interest rates are actually bad for the economy. They are bad for economic growth. They don't boost any growth in the economy. They make private sector borrowing much harder to do. And that leaves the banks with only a small pool to lend to. That is, for example, government, because government is considered a safety net. So when you look at the bigger scheme, banks need to, yes, they need to make a return on their risk that they're taking, but it doesn't need to be that high. It needs to be within, say between anything between 6 to 10 extra basis points. At least that would be something that's fathomable. So they need to start reducing more, because the central bank has been reducing since October last year and up until now to the current position where we are at 9%. But we haven't seen the same in the banking sector. So this also, I think, speaks to government, because now with the oil that the government of Uganda is exploring from the year 2020, they need to also start thinking along the lines of putting be it an agricultural bank or an infrastructure bank. Because even when you look at the Public Finance Management Act of 2015 of the country, it also states that portions of oil proceeds will be used towards infrastructure. So government can also come in and establish development banks or infrastructure banks or agricultural banks, which will also help the people to access a different set of credit. That will create competition for the banks, and they will be forced by the environment to also come down.
All right. Now, we did see the Ugandan economy, the GDP rise to a good 6.4% year-on-year in the first quarter of 2018. But also, you did mention something very interesting there, that when we see banks also pushing a lot when it comes to the interest rates, 21% is a very high one. But also, I do believe that the Bank of Uganda, when the Minister for Planning did say that they don't want to go the same way as Kenya, I mean, we did see a 0.4 percentage point slice from the economic growth for Kenya just because of the rate cap. If this was introduced in a way to control the banking industry, how much would it hurt the Ugandan economy?
It would hurt it very much, because then it just means the banks are now undertaking more screening of the people that actually qualify for credit. And that will leave a very small number of people that can have access to the credit. So that, again, is bad for the economy. It's bad for business from a growth perspective. From the government perspective as well, the targets that they have set for themselves, they are going to miss those targets because they are not, there won't be enough money circulating in the economy. And interesting to note, though, even in Kenya, where they had the help of IMF to try and restructure their debt, the IMF noted that the government of Kenya needs to repeal that, Section 33B of the Banking Amendment Act of 2016. So if it's coming also from big institutions like IMF advising Kenya that, no, you guys do not have to do this, it's bad for your economy, it will be counterproductive for the Ugandan government to go ahead and do exactly the same thing that their neighbors are being told not to do. And it's important to note that the Ugandan government doesn't have to do this because there's been an uptake, a change, almost a change in direction in how the economy is going.
All right. Okay. Dumi, thank you very much for creating time. I do believe that next Monday we'll be back at 8 looking more on rather the Kenyan market, because there has been so much happening on that end. So allow me to leave it right here, and thank you for creating time. That was Dumi Jere, CEO for AfricaCatalysts.